Ever feel like the stock market is playing some kind of cruel joke on you?
Tell me about it.
Prices bouncing around, up, down, sideways. That's right.
I can definitely feel that way sometimes.
So today we're going to really break down why that happens.
We're doing a deep dive into what's behind all those crazy market movements, and
trust me, once you see how the gears are turning.
you'll never look at the ticker tape the same way again.
Exactly.
It's a question that has, well, fascinated and frustrated traders for centuries, really.
Yeah.
And while it might seem random at first glance, there's actually a fascinating kind of order, within all the chaos.
So our listener today, they're super interested in those constant market swings, trying to make sense of it all. Is there some method to the madness? What's really driving these ups and downs?
Yeah. Right. A lot of it boils down to the role of market makers.
Market makers.
See, most people think it's just, buyers and sellers going head to head, battling it out.
Right.
But it's not that simple. Market makers are like the intermediaries. They're always there to buy or sell from, ensuring there's enough liquidity for the market to actually function.
Okay, so walk me through this whole market maker thing. Are they like the referees of the stock exchange, keeping things fair?
That's part of it. But honestly, a better analogy might be the referees and the stadium owners all rolled into one.
Whoa.
They literally make the market. They set the stage, make sure the game runs smoothly. They even step in to stop things from getting too wild. Without them, we'd see insane volatility, prices swinging like crazy. They're there to help maintain order.
Sounds like a pretty powerful position to be in.
It is.
I mean, if they're the ones ensuring stability, doesn't that also give them the ability to influence where the prices go?
You're hitting on a key point there. It's a fascinating paradox. On one hand, they're absolutely crucial for keeping the market from going completely haywire.
Right.
But on the other hand, they absolutely have the ability to move the market with their actions.
So which is it? Are they like a force for good or something else entirely?
Well, that's where things get a little nuanced. Take high-frequency trading, for example, and the complex algorithms these firms use. They have an incredible view of the order flow. Basically, who's buying, who's selling, and at what price.
Wow.
This gives them a level of insight and therefore influence that's pretty much unparalleled in today's market.
Okay, so for our listener who's probably glued to their seat right now, what does this actually mean for them?
Well,
if you're trying to play the market, how do you even factor in these market makers?
It's all about understanding the playing field.
Right.
Once you know that these entities are working behind the scenes, managing that volatility, you can start to make more informed trading decisions. You start to see those price movements in a whole new light. Not just random noise, but potential reactions to the actions of these, major players.
So it's like we're trying to understand this giant complex machine.
Yeah.
But there's this whole other level of gears and levers we didn't even know about.
That's a great way to put it. And those hidden gears could really throw a wrench in your plans, if you're not careful.
Okay, so how does this market making actually work? What are these firms doing all day to make a market?
Well, at its core, they're obligated to provide continuous bids and offers for specific securities.
Okay.
Imagine you're at a bustling marketplace, right?
Yeah.
They're the vendors with booths on both sides of the aisle.
Right.
Always ready to buy your goods at a slightly lower price than they're selling them for.
Right.
That difference, the spread between their bid and ask, that's how they make their profit.
So they're not really betting on whether a stock goes up or down like most investors.
Right. Their primary goal isn't to, speculate on which way the market will move.
Okay.
Their game is to profit from that spread, regardless of if the market skyrockets or takes a nosedive.
Right.
Of course, they're not completely immune to risk. They have to manage their own positions and adjust strategies based on what's happening.
Right.
But facilitating trades, ensuring that constant flow, that's their bread and butter.
I got to admit, this is making me rethink everything I thought I knew about how the stock market operates.
Really?
It's almost disheartening,
Yeah.
If these big players have so much influence, can the average investor even compete? Is it all rigged against us?
That's a common reaction, but I wouldn't say it's, rigged.
Okay.
Think of it this way. Individual investors and these large institutions, they're kind of playing different games, with different sets of rules.
Okay.
But that doesn't mean you're automatically going to lose.
Right.
It just means you need a different game plan.
All right. So what's our listeners' game plan then? If we're going up against these market-making giants, what can we actually do to protect ourselves and maybe even come out ahead?
Well, first things first, you've already taken the most important step, educating yourself.
Okay.
The more you understand about, market mechanics,
right,
the less intimidating those mechanics become, right?
Yeah.
You see them for what they are, and you can start to anticipate how they might influence things.
So knowledge is power, as they say.
Absolutely. But it's not just about knowing that market makers exist.
Yeah.
It's about understanding how they operate and what motivates them.
Okay.
For example, remember we talked about their ability to see order flow?
Yeah.
Well, there are ways for you, too, to get a glimpse into that flow.
Okay.
To see where the big money is moving.
Okay. That sounds promising.
Yeah.
Tell me more about these glimpses into the order flow. What am I looking for?
You can start by looking at something called Orderbook depth.
Orderbook depth.
Now, this might sound a bit technical.
Okay.
But it's basically a real-time snapshot of all the buy and sell orders that are currently out there for a given stock.
Okay.
You can see the volume at each price level.
Right.
Which gives you a sense of the buying and selling pressure at those levels.
So if I'm seeing a huge wall of buy orders just like stacked up just below the current price, that could indicate strong support and maybe even a potential price surge.
Exactly. It could mean that big institutional investors are loading up on that stock.
Wow.
And that can be a powerful signal.
Right.
On the flip side, if you see a ton of sell orders piled up just above the current price, it might be a sign that a big player is looking to unload their position, which could put downward pressure on the price.
This is fascinating stuff. It's like we're starting to see the matrix here.
Yeah.
Those like ones and zeros that make up the market's reality.
And that's precisely what you want to do. Start thinking like the market makers themselves. Anticipate their moves, understand their incentives, and use that knowledge to make more informed trading decisions.
All right, you've officially blown my mind wide open with this order book depth thing.
It's a game changer for sure.
It really is. Like, I suddenly have this whole new set of clues for this whole market mystery. But let's bring it back down to earth for a second, okay? If we're thinking about our listener, what are some practical takeaways they can use to actually navigate this market that's clearly, influenced by these major players?
Well, the good news is knowledge really is power in this game, Okay. You've heard the saying, if you can't beat them, join them.
Right.
Well, we're not exactly joining them. But by understanding how market makers operate, you can actually make the market work for you instead of against you.
Okay, I'm all ears. Give me those golden nuggets of wisdom.
All right. First and foremost, remember that spread we talked about? The difference between the bid and ask?
Yeah.
That's essentially the market maker's commission.
Okay.
You can think of it as like the cost of doing business,
Right.
So one way to kind of minimize your costs is to focus on highly liquid assets. The more actively traded a stock or other asset is, the tighter that spread is going to be. So you're losing less money right out of the gate.
That makes perfect sense. Don't go like hunting for bargains in some dusty, illiquid corner of the market.
Exactly.
Yeah.
Now, here's another key tip, and this is a tough one to master. Be patient.
Oh, yeah.
You're going to see those prices fluctuate, sometimes wildly.
Right.
And it's easy to get caught up in that frenzy, to feel like you need to react to every little movement.
Totally.
But remember, market makers are often playing a short-term game. They have the tools, the resources to capitalize on those tiny swings.
Right.
You, on the other hand, hopefully you're in it for the long haul. Right.
Easier said than done, though, right?
Right.
When you're watching your portfolio balance, like, go up and down like a roller coaster, it's hard not to, panic.
Yeah. Oh, absolutely. And that's precisely why it is so crucial to have a solid investment thesis.
Okay.
You need to know why you own, what you believe in, what your long-term goals are. Write it down, look at it every day, tattoo it on your arm if you have to.
Right.
But don't let those market makers' games shake you out of a well-thought-out position.
So it's about discipline.
Yeah.
About tuning out the noise and sticking to your plan.
Exactly. Now, that doesn't mean being blind to new information or major shifts in the market.
Right.
But it does mean not overreacting to every little blip on the radar, because chances are many of those blips are being orchestrated or at the very least influenced by the very market makers we've been talking about.
This whole conversation has been eye-opening, truly. It feels like we've pulled back the curtain on this like hidden world that most investors don't even know exists.
Yeah.
Any final thoughts for our listener today before we release them back into the wild world of the market?
Here's something I always find myself pondering. We've talked a lot about how market makers, they thrive on volatility, right?
Right.
But what if we actually achieved perfect market stability?
Hmm.
A world without those wild swings, unpredictable moves. Would that truly be ideal? Or would it stifle innovation, make the market stagnant, boring even?
Wow.
It's just an interesting question to consider.
Now that is how you leave your audience wanting more. Knowledge is power. Understanding is key. And sometimes a healthy dose of skepticism, about what's really driving those market moves, that can be the best investment you ever make. Thanks for joining us on this deep dive, everyone.